Welcome to the Politica UK InfoPod. A growing question among analysts is no longer whether the Iran war will escalate. It is how long the conflict might last. Because if the war were to continue for 6 months, the consequences could reach far beyond the battlefield in the Middle East. The first and most immediate effect would likely be felt in global energy markets. Roughly 1/5 of the world's oil normally passes through the Strait of Hormuz, the narrow shipping channel connecting the Persian Gulf to the global ocean. Disruptions to that route have already shaken markets, and experts warn that prolonged instability could remove tens of millions of barrels of oil from global supply. If the conflict continues for months, analysts say oil prices could climb well above $100 a barrel and potentially reach around $130 in extreme scenarios. Higher oil prices ripple through the global economy. Fuel costs rise, airline tickets become more expensive, shipping costs increase, and the price of food often follows because modern agriculture depends heavily on energy and fertilizer. Economists warn that prolonged energy shocks can create a dangerous economic combination known as stagflation, slower economic growth combined with rising prices. Financial markets would also feel the strain. Stock markets typically react negatively to prolonged geopolitical instability, while investors move money towards safer assets such as government bonds or the US dollar. Some countries would suffer more than others. Energy importing nations, particularly in Asia and Europe, would face the sharpest economic pressure because they depend heavily on Middle Eastern oil supplies. China, India, Japan and South Korea collectively receive a large share of their energy imports from the Gulf region. If shipping disruptions persist, those economies could face higher inflation, weaker growth, and currency pressure. Europe would face its own challenges. The continent is still recovering from the energy shock that followed Russia's invasion of Ukraine. Another prolonged disruption to global oil and gas markets could slow economic recovery and keep energy prices elevated for households and industry. But the consequences would not be limited to wealthy economies. Humanitarian organizations are already warning that global aid operations are being disrupted by the war's impact on shipping routes, airspace closures, and rising fuel costs. That makes it more difficult to deliver food and medical supplies to crisis zones around the world. The longer the conflict continues, the greater the pressure on international supply chains. Air cargo routes through the Middle East could remain restricted, shipping insurance costs could rise dramatically, and companies might be forced to reroute goods across longer and more expensive routes. Over time, these disruptions could reshape global trade patterns. But prolonged conflict could also accelerate major changes in energy policy. Many governments may respond by increasing investment in renewable energy, nuclear power, and domestic energy production in order to reduce dependence on volatile fossil fuel supply routes. History suggests that major wars often trigger exactly this kind of shift. The oil shocks of the 1970s reshaped global energy policy for decades. A prolonged Iran war could do something similar. And then there is the geopolitical dimension. If the conflict spreads across the wider region, drawing in militias, neighboring states, or shipping routes across the Gulf, the risk of a broader regional war increases. That would transform what began as a military confrontation into a much larger geopolitical crisis. In other words, a 6-month war would likely mean more than continued fighting. It could mean sustained pressure on the global economy, rising energy prices, disrupted supply chains, and growing geopolitical instability. For the world, the real question would no longer be simply who wins the war. It would be how long the global system can absorb its consequences. This InfoPod was brought to you by Politica UK.